All right, John Mauldin, it's that time of year again. We're back for the Strategic Investment Conference.
That was last week.
I know,
it's
right?
not a year.
It's crazy.
God.
It's crazy.
You and I seem to find ourselves in the same zip code
It's remarkable.
so often around the world. And every time you walk into the room, I light up because it's just fun to be with Grant Williams.
Thank you. It's always fun for you and I to sit and chat, and it's nice to have the cameras here once so other people can join in, right? Because we get to do this way more than you would think in various places around the world. And we're here for your conference again, and the title this year is Paradigm Shift. And so what I want to talk to you about today are some of these big pictures. We'll forget markets and economies. Let's get that out of the way, because I want to talk some really big picture stuff that I know you'll spend a lot of time thinking about. So what's uppermost in your mind? Some of these really big secular generational shifts. Where do you begin when you try and pull that together?
Well, I've been working on, for a long time now, writing a book called The Age of Transformation. Where the world's going to be in 20 years. And I've actually written and published 2 books since I started writing that book.
Now, if you started writing it 20 years ago, we got a problem.
But when I come back from this conference, and then I'll tell your readers I'm going to the Virgin Islands and I'm going to get married to Shane.
All right, finally.
And finally getting married to Shane. One of my better life future decisions. Studying, thinking, just this massive amount of information, because it's not just technology. So many people, when they think about the future, they want to focus on technology, or they want to focus on this. I want to talk about the world. And really, every chapter is potentially a book, so I have to really pull it in. But when the reader's going to walk away from the book, I think, he's going to go, oh my God, everything's going to change. And you and I have talked about before in our lives that the, four most dangerous words in the world are, this time it's different.
Yeah.
But if we hear somebody say that,
Don't do it.
We click
Don't
them
do
off.
it.
We click. No,
I can see you're going to do it.
I'm going to do it. It's different this time. Things really are going to be different. And the thing I think I'm focused on and worried about the most is the future of work. Because for much of humanity, how we see ourselves, what our innate nature is carried out in our work, in our passions, in what we do. And Eberstadt wrote this wonderful book called Men Without Work. 10 million American males have dropped out of the workforce. This has been a 40-year lower left to upper right curve. So it's not something that happened with Reagan or Obama or Bush. It's been a steady state. It's going to change more. When we went from the farm, 80% in the late 1700s, to 50% on the farm in 1850 to 2% today in the U.S., it was 10 generations. And each generation, a smaller piece of the total pie, was working on the farms. They'd leave and go to the city. We're going to have that same type of occupational shift in the next 10, 15, 20 years. PricewaterhouseCoopers came out with a report here just a few weeks ago that said 38% of American jobs will be automated between now and 2030. Really? 38%? Long list, details. What are they going to do? Where do they go? Well, that automation is going to create new opportunities, new jobs. We're going to be down 250,000 information analysts. Where are we going to find them? Are we going to retrain the taxi cab drivers, the truck drivers, to be information analysts? How does this societal change work? We think that the frustration that produced Trump, the frustration that almost produced Bernie Sanders, was like this final denouement of frustration. What I'm telling you, when you look at the causes, when you get into the picture, Trump's the harbinger. He's the beginning. It's going to be societal angst on steroids. We're going to get whipped back and forth because people, at the end of the day, they're uncomfortable with change.
Yeah, well, I think we all are. We all are. But this kind of change is, from the technology standpoint, it's incredible. I mean, human beings do things to make their lives easier, but it feels like we are at that point where we're going to make things so easy that there's nothing for a lot of people to do.
Well, there'll be something for them to do. I mean, you've seen the charts of how many companies and manufacturing companies are looking for workers and how many they're actually hiring. Okay, they can't find people to do the tinkering and the pushing and the I mean, there's stuff to do, but there just may not be stuff to do in your city. The great ironies is that America came as a land of immigrants. Nearly 99% of us came from somewhere, Europe or, Asia. And yet, today, people don't want to move from Ohio to Texas to get a job. I mean, they've got their family, they've got their roots, and that may be where the jobs are. And that's going to be wrenching. I mean, it's just, I read about a new steel mill. Let's call it steel. Let's put quotes around steel. New materials mill. And it's launching in Ashland, Kentucky, because it's a right-to-work state, because the owners had sold it and they never want to deal with a union again. $1.2 billion. It'll cost them $10 million a year to maintain it, as opposed to $100 million. They're using materials they're going to produce materials 3 to 4 times stronger than steel, that's lighter than steel. That mill and all the others that come out from the radical changes in material science, are going to put one steel mill after another out of work all over the world.
But look, I keep reading.
So it's not just taxi drivers and automation.
No, it's not. It's not. But the problem is, this is a trend that, you're right, is sweeping the globe. But the problem is, when you build these factories, you create these new technologies, and they do run more on automation. It does put people out of work, and the people that have jobs, if you're getting your running costs from 100 million to 10 million, you're not going to give that 90 million back to the workers and up their salaries. There's 10% of the workforce, we're going to times their salaries by 5.
No, they're dropping the price of their product.
Exactly right. So how do you pay these people? How do you keep their living standards?
They're paying $40,000 to $50,000 a year to these workers in Kentucky. I mean, these are the highest paying jobs in that community.
Right, but there's 10%.
The number of people applying, for these jobs. I mean, it's 500 workers.
Right.
I mean,
instead of 5,000,
but it will be instead of 5,000.
Yeah.
And they'll be producing more. I mean, America is producing more today than we've ever produced in the past. We're just doing it with fewer workers.
Yeah.
And
which is good and terrible.
Well, it's good and terrible. I mean, it's like we use a number called gross domestic product. It's a theoretical, hypothetical, artificially derived number, but we quote it like it's gospel.
Yeah, right.
If we produce twice as much oil at $50 rather than at $100, we're saying, in terms of GDP, that it's the same thing. And yet you and I know, well, wait a minute, we got twice as much oil. We're producing it cheaper. Isn't cheaper better? Well, not if you're measuring GDP. Food is getting cheaper. I mean, we've pulled 2 or 3 billion people out of poverty in the world in the last 20 years. We're living longer. We're living healthier. Things are radically improving, but those aren't what make the headlines. But nonetheless, it's the change that is what we see. And my fear is that the moving back and forth, the shift from Sanders to Trump or whoever it is in the future, it's the players on the front of the team don't make that much of a difference in the sense of the forces that are driving them. It is that people are going to be saying, you've got to protect us from change. They want government somehow or another to solve problems that the government can't solve. The government cannot solve the problem of the steel mills that were built to manufacture steel that doesn't compete with the new mill.
Yeah.
All the old steel mill can do is retool and change and somehow or another reconfigure itself on the fly.
But this is the crux of the problem right here, because you've got, Trump, Sanders, they're two sides of the same coin. They're disaffection, essentially, with inequality, or the sense of inequality. And what these technologies, these advancements are doing is amplifying that dislocation, because to your point about the steel mill in Kentucky, you've got 1/10 of the population are doing great now. The other 90% have been screwed out of a job, and they see 10% of their former colleagues now earning 50 grand a year, and they're thinking, hang on a second, this isn't fair. And so as much as all this change is incredible for mankind, on a local level, it causes enormous problems in a world where those problems are already there. And we do have Trump, we do have Sanders.
And so that's when you say, what am I focusing on? What is the kind of the big picture leap? Yes. And these changes are going to happen at a time when, for you and I are both focused, the sovereign debt in the world is at bubble levels. The
right.
Total government and societal debt plus unfunded liabilities, 500 trillion in an 80 trillion GDP world. How do you cover the carry cost on that?
Well, you don't. You don't.
That's
right? Yeah, exactly.
So it becomes what I'm calling the Great Reset. We have to go back through and figure out, as a society, how we want to meet future promises. We want to decide how we're going to deal with the debt. I think it's probably not a shock if I say that I'm an intellectual libertarian, and I'm a fan of Hayek. But we're going to have to embrace heresy in the next 5 to 10 years. Grant, you and I will be writing about why the United States needs to monetize its debt.
Right.
In the next global recession, U.S. government debt, federal, state, and local, over 30 trillion, rising $1.5 trillion, $2 trillion a year, until we bring it somehow under control, but costs keep going up. Because even as stuff gets cheaper, services don't. And what are we buying? We're buying education, we're buying healthcare, and so forth. Now, over time, 30 years from now, I think healthcare costs actually go down, because technology is going to come to the front. There's 3 guys on the stage at the conference. Those 3 guys represent $1 trillion. Now, I don't know if their companies will ever be worth $1 trillion, but they're going to destroy $1 trillion in market cap.
Right.
Just like Amazon is destroying the market cap of Sears and everybody else. But Jeff Bezos doesn't have it clear. He's not on the road to eternal domination. Jack Ma at Alibaba is selling stuff at 20 cents on the dollar for what Amazon is selling its stuff for. Amazon is now selling Chinese material from Chinese workers in the U.S. And if you're willing to wait 30 days where the Chinese government subsidizes the shipping, your costs are going down for stuff, but not for services.
But all I hear when we talk about this, all I'm hearing is deflation everywhere.
And it's deflation in the stuff, but not deflation in services.
But is that?
And I mean, it's this. And by the way, that means that services, which is salaries, it's education, it's going to have to deflate right along as well.
Well, this is my point. So we've got these huge deflationary pressures. You've got some of society doing very well, the 1% at the moment. Maybe that moves to 2%.
Something the 20%. You have on both sides of the philosophical political divide. You have the protected class. You have the people that can afford to protect themselves and to be involved and be on the train of change. And then you have the people that feel unprotected. And the unprotected are the ones on both sides, okay? And I'm not arguing with them. I'm just noting as a fact that the protected class need to figure out how they're going to take care of the unprotected class. Because eventually the unprotected class are going to go, wait a minute, this is just not working for us.
But isn't that what's happening right now? You say at some point that's going to happen. It feels to me like that's starting to happen now. If Trump is the harbinger of anything, it's that, surely.
Well, it's like this silly call by the media elite to impeach Trump.
Right.
I mean, it's like, okay, I can understand that you might have some issues with him. I can understand your frustration. I get that. I was frustrated for the previous 8 years, and you were frustrated for the 8 years before that.
Sure, yeah. No, of course. That's the nature of politics.
That's the nature of the beast. But the can you imagine, think about the 38 to 40% of honest to God Trump backers. Not people who are on the Republican team and voted for the team, but they're backers and they're believers. And you go to them and you say, we're going to take your man out over issues that they don't understand. Mm-hmm. They can't see the point. Can you imagine the upheaval?
I don't know, it would be shocking, but can Trump actually deliver? Because from what you're talking about, he was voted in by the steelworkers, right? These are the guys, middle American, blue-collar, hard-working people who voted Trump in because they felt that disaffection. From what you're saying, it's impossible for him to deliver what they want.
I'm really, honest to God, skeptical that anybody, Grant, if I could magically make you president, okay?
I wouldn't accept it.
I wouldn't wish that on my best friend like you. But, I don't think anybody, given the structural changes, the structural problems that we have. I remember sitting with Newt Gingrich in Italy 4 summers ago. Late at night, he was talking about Romney. Literally every day at 4:30, he would start walking the hills out in this little village in Trequanda, talking to Romney's campaign manager. giving them advice for 30 minutes. And he was convinced that Romney could win. I wasn't. I was sitting with Newt Gingrich in a little village of Trequanda in Italy, where we were spending a few days together. And we were talking about the future in America, because he's a bit of a futurist, not a bit of a, he's a fabulous futurist, and really has a grasp on politics and breakthrough technology and so forth. And we were talking about the future. And I said, we're rapidly approaching the place where we'll have no good choices. And he says, John, that's not true. We will have bad choices and simply difficult choices. Fair enough. He was right. If Romney had won, he would have had some difficult choices. I think we're rapidly approaching the time where the world is going to be looking, the developed world, is going to be looking more and more like Greece. Greece's choices 5 years ago, 6 years ago, were between bad choices and worse choices. And I think they chose the worst choice, but we're coming to the place where there will be no even difficult choices. There's only going to be a choice that you make that is going to create havoc and chaos. You start having to monetize global debt on the level that we're going to have to do it globally. That's not a recipe for stability. That's not a recipe for curing inequality. You start taking 38% of American jobs and automate them. It's about 30% of English jobs. I mean, America's the worst.
Well, we're a nation of butlers. There's always a place. There's always a place for a butler in England, don't worry. There'll be plenty of people becoming butlers, I'm sure.
Well, we may be exporting people back to England to become butlers. I don't know.
No, you can't have an American accent if you're going to be a butler, John. That just doesn't fly.
It's just difficult to imagine the societal change. We're going to put 4 billion people who are now not connected to the internet. They're going to be connected to the internet within the next 10, 15 years. We're going to see, I think, within 5 years, one of 3 companies will have a full-on bullet for cancer. We're going to see new organs regenerated. There's so much going to happen. And yet, inequality is a relative thing. And we see it in the United States, and we feel it, and we feel inequality. Yet, you and I go around the world, and we see third world countries who would give everything they had to become and be as unequal as the average American worker.
No, you're right, but people vote locally. They don't vote relatively. That's the problem.
It is all local. It is all a relative problem. And the fact that in 20 years their life is going to be so much better. They're going to be so much richer. They're going to have so much more access to everything. It's still going to be relative. And the producers of that change are going to have this fabulous, phenomenal wealth, and they'll bring people along with them, but they're not going to be bringing everybody along with them. And as a society, we have to figure out how to do that. Now, Sweden's starting to have some experiments. Finland's starting to have an experiment with universal basic income. Grant, if I say the word to you, the words universal basic income, it's philosophically abhorrent.
I completely agree.
But Grant, we may have to embrace heresy as a culture to survive.
Yeah, but see, I disagree, because if you decide that that's the way you want to go, that's fine. The Finns might try it, the Danes might try it. Okay, that's fine. These are small societies. If we were trying to implement that when we had 20% debt to GDP, there's some space, you can do that. But where we are now, this idea of giving people more stuff to keep them happy, to try and equal the playing field, to do all this stuff, it doesn't work. And to your point earlier about what do we do with this debt, every single solution that's being offered does one thing in common: increases that debt, because it's all future promises they're going to pull forward to try and sate either demand or sate emotions now.
That means monetarily, policy-wise, we're going to have to embrace heresy. We're going to have to think the unthinkable. And I can think of 3 or 4 ways that we can do it, and they're all unthinkable.
Right.
None of them would have been broached by Hayek.
No.
No. And frankly, I think John Maynard Keynes would roll in his grave to even think that we're doing some of these things. These problems that we're going to come up to are going to be, I don't think the word catastrophic, is the wrong potential word.
No, I agree with you.
And how do we, as a culture, as a country, how do we embrace that?
Well,
that's what I'm worried about. So when you ask me, when I think about the future, I think the societal changes are every bit as difficult and problematic as the economic and investment changes.
Well, and the problem is, with all the healthcare technology, people are going to be being pissed off for longer because they're going to live to be 100.
Not only are they going to live longer, they're going to live longer and healthier.
Yeah.
And Grant, you are young enough. I'm on the cusp that they will turn you younger again.
I can't think of anything worse. don't make me go backwards. Don't make me go backwards. I know you want to live forever.
Why wouldn't you want to live forever if you could be young all that time?
I'm tired, John. I'm tired.
Okay, but you would have more time to rest.
Oh, yeah, I wish. No, if you can achieve that I'll buy into. If you can find me some more time to rest, I'll take that.
I'm going to give you a younger you with more rest.
All right. Well, okay. We'll see. I'm going to keep the receipt just for a little time. But let's talk about this reset, because I think you're right. I think there is a reset coming, and that word means a lot of different things to a lot of people. Some people think of it just in a financial sense, as a debt jubilee, but I think you've hit upon this with what you've said. It's much broader than that. This reset is not just a financial reset; it's a societal reset. And the problem with any kind of reset that is debt-based, which is essentially the problem we have here, is it means taking the capital, the real capital, away from the people that have it to fill the holes. Because you can write off the debt if you want to do that, but the opposite side of the ledger takes a hit. So it feels to me there is a transfer of wealth coming that is going to be the like of which we've never seen before, because the debt is the like of which we've never seen before. Can you see a way that plays out peacefully? Because I struggle to see how that happens.
Define peacefully.
Well, without conflict, like real conflict, the kind of conflict that we thought we were done with as a species.
I mean, conflict as in guns?
Conflict as in, well, whether it's cyber, whatever it is, whether it's one nation that's hacking into another's central bank account, like we saw in Bangladesh. They took 80 million from Bangladesh. You didn't even read about it.
Yeah.
Yeah. How does this play out? Because I can't see a peaceful Bretton Woods type conference where we all get around a table and we divvy things up, and because it just doesn't work anymore.
If we don't have a Bretton Woods 3, where we all agree to hold hands and walk off the cliff together, to monetize together, to roughly keep our currencies in line and in balance over time, can't do it in 1 year.
No.
Okay. Then it will become every central bank for itself, every country for itself, and that will be chaotic. That will be truly devastating. I don't think we have any choice but to sit around the Bretton Woods table. I mean, we could say no. We could go into a world where everybody, takes on their problems and it's every country for itself. That's not a world that is successful. It's chaotic. I don't know how that transition works, Grant.
You mix with a lot of the people that are going to make these decisions. You spend time talking to them. Do they understand the scale of the problem, or is there a little bit of they're focusing here as opposed to this much broader dilemma that they face?
They're more focused on what's in front of them, and they haven't really set back. A few have.
Yeah, sure.
Okay. A few have stepped back and looked at the broad picture, and they take deep breaths. And then they have to come back and focus on what's in front of them. Just in the same way, when you're running your business, you look at the broader picture, but you have to sit down from time to time and have a conversation. Yeah. That's, and you got to focus on that conversation rather than the broader picture. But we're going to have a global conversation. We're going to have a national conversation. We look at the problems in Europe. They've got problems.
They do.
I mean, the reality is that Europe, when you go from country to country and you look at it, its problems are every bit as big or worse than the United States.
Sure.
They got to figure out how to make it through. I mean, do we all become Japan? Do we all say, we're going to figure out how to have no nominal GDP growth and we're going to start monetizing our debt at 10 to 15% of total GDP every year? And somehow or another, it's working.
Well, it's working for Japan in isolation. The problem is when everyone starts to do it. That's to me always been the line in the sand.
That's what we're going to find out.
Well, look, I think we are Japan. I think we're all Japan. We just don't want to face up to that. I mean, we have different demographic challenges, but at the end of the day, if you look at what's happening with global population, you look at the sovereign debt, you look at the yields, this deflationary world is going to take bond yields lower. It's going to put all that pressure on wherever you go. And the answer to it, should have been given decades ago, and some hard choices should have been made then. But now we're in the position where everything's a reaction. It's putting out the next fire. There's no one's looking forward and saying, and I've told this story before, in Japan, we knew 25 years ago that 2015 was the year the Japanese population started. We knew it 25 years ago. No one did anything about it. And the solutions that would work today would have worked 25 years ago, but they put it off. It's the same in the US, it's the same in Germany. Natural population rates in Germany, Italy, Portugal are all declining. With no immigration, the people are dying off. And the immigration is the solution to Japan's problems. That was a non-starter. It's causing problems in Germany, it's causing problems in Italy. So the solutions are very difficult things to sell politically. So I just don't see any of these answers being made and imposed upon people. It's going to be, okay, well, we can't possibly say that. We can't possibly cut Social Security. We can't possibly do this. We can't possibly do that. So we won't. We'll come up with a stopgap. And that is spreading around the world. And it's now reached the point where even if you had the balls to make these moves, you now can't. Because to your point, the outcome, if you do that, is chaos. And so why voluntarily impose chaos upon a district, a country, a nation, a continent? Why not wait and hope chaos is somebody else's problem for 8, 12, 16 years down the road?
Well, that's what we've done.
Yeah, absolutely.
And I'm arguing that in the next 2, 5, 10 years, we come to the place where we're beyond difficult choices, and we're now to, here are the bad choices in front of you. Choose bad choice A or bad choice B. But
at the moment, bad choice A and B, there's also choice 3, which is, well, let's print some more money rather than make A and B.
Well, but I print more money is bad choice C. I mean,
in reality, yes, optically, because it's worked, right?
It's worked.
It's worked.
It's worked, as you said, for Japan in isolation. Can it work as a group? Yeah. If all the developed countries say, okay, we're going to monetize our debt. What happens in the emerging markets? They don't have enough debt to monetize. Korea can't monetize its debt. It doesn't have that much. If they start monetizing and printing and trying to defend their currency, they get inflation. Well, that doesn't sound like a good world. I mean, everybody's choice is going to affect everybody else in a globalized economy and world.
So amongst all this stuff, you know, this is it all sounds a bit doom and gloom, but there's always, you know, there are always places to focus, and you, more than anybody, the last few years have had this forward-looking. You've embraced healthcare technology and advancement. So talk a little bit on the sunnier side. When you talk about these changes that are going to make our lives longer and increase our health, talk a little bit about some of the incredible technology that you've seen happening.
Well, I mean, there's a company. There's actually 3 companies, but there's one that I'm involved with in terms of I know what's happening because I talk to the CEO a lot. 9, almost 10 months into phase 1 trial for full-on bullet cancer. We're dealing with gliomas, pancreatic cancer, I mean, ugly stuff, walking dead. We're just now getting up to the levels of dosage where we think it's effective, or we hope it'll be effective. But nobody's died. That's really amazing. Mike West, when I first met him almost 10 years ago, was talking about in 30 to 35 years, he'll be able to turn us young again. It's 10 years later, and now he's talking 10 to 15 years. Every 5 years, he pulls it in another 5 years. They are making breakthroughs. The breakthroughs they're making in communications, in material sciences, in automation. I mean, when Elon Musk first said that they would have a automated driving car by 2022, I turned to somebody and I said, I'll take the over on that bet. And I'll put some size on it now. You know? I'm no longer going to take that bet. I mean, he landed a silly rocket in the middle of the ocean on a boat that came out of space, landed it, reused it, sent it back up again. That was impossible. We have people doing the impossible, doing the unthinkable every day. I mean, we talked about Amazon and Alibaba, but I mean, I've got a friend of mine, they're running a $4 billion materials company. And started out with catalogs 30, 35 years ago. Right. And they have morphed. And Amazon hasn't bit into them at all. They're continuing to grow because they look at Amazon and say, we can compete with you. We're cheaper, better, faster. I mean, it is not all one way. There are lots of people creating amazing new companies. It's not just biotech. I mean, it's all over the place. I'm terribly optimistic for the future of humanity. I think when we get to the other side of the Great Reset, we're going to see the greatest bull market in the history of the world. Now, it may not show up in the indexes because those indexes are full of old companies. You know, when I talked about those 3 guys that are going to take $1 trillion of market cap out, well, those old biotech companies are in the indexes. But if you change your trading strategy, if you change your style, let me propose something truly heretical. I think active management is going to be the way to run your world from now onto the other side and then after. This move into passive investing, into index investing, is going to prove to be just another bubble, and it's going to continue to grow until Mr. Market, who is really one of the most devilishly evil people.
No kidding.
When he's got as many people sucked in so that the most people can get hurt, then he's going to flip the switch on it. And you're going to have wish you stayed with your active managers.
I don't see, that's not heresy to me at all.
I
completely agree.
I mean,
No, I completely agree. But you're right in a broader sense that is right now. But again, we keep coming back to this stuff. People are piling into ETFs because they don't want to pay the fees, because they can't afford to pay the fees, because they can't afford to give away 10% or 15% in a zero world. So you kind of, people are being herded into ETFs, many of them out of necessity. Okay, the market's been going up, so they kind of say, well, why do I need an active manager? But they're being forced there because most of them say, I can't afford to pay fees because I don't think I'm going to make the hurdle.
Well, it's not even not being able to afford to pay the fees. Is that the fees the active managers are charging haven't been justified?
No.
And I mean, so a rational investor looks at it and says, well, wait a minute, I could make more by paying less. And so they're making the rational choice. Here's the problem, and active managers have not responded well. I mean,
because they can't, right?
Okay, how many active managers do you know whine and bitch and moan because value seems to not be rewarded anymore?
Sure.
Their active style is not rewarded anymore. And my response is, so then change. Why do you think something that you've done for 40 years is going to be the way the world's going to work in the next 40? I mean, in the same way that steel mill worker is going to have to figure out how to work for the new materials company, or the steel mill is going to have to figure out how to create new product and adapt and change. Active money management is going to have to figure out how to adapt and change. And we have a lot of, and we have to be careful about saying this because you and I are part of the gray hair. I mean, let's face it, but we have a lot of gray hair money managers that don't want to change.
No.
They are convinced that this is what works, and this is what we should do. And, well, doesn't seem to be working out that way.
Well, time would suggest over the cycle they're right, and it does work. But again, this is more deflationary pressure. This is, you've built big overheads, your prices have to come down if you want it, and that's more deflation.
The prices are going to have to come down. The services are going to have to be increased. The overheads have to be reduced. I mean, that same PricewaterhouseCoopers report that talked about 38% of jobs being automated, it says 61% of financial service workers will be out of a job in the next 13 years.
So we got that going for us.
So,
okay.
I mean, and I tell everybody that hears that, I'm saying, and that means there's a bull market in competence.
Yeah.
Okay? You have to figure out how to be competent.
Yeah. That's a great point.
You have to figure out how to adapt and change, because it's the species, whether it's a steel worker or an investment money manager, that figures out how to adapt and change. The clothing company that figures out how to adapt and change is what's going to survive. And so when 61% of them are out of job, half the brokers and advisors are out of business, I look at the other half and I say, you should be shouting and leaping for joy, because that means their clients are going to have to find somebody to go to, and you might as well be the one to double your business at a minimum just by surviving.
Yeah.
And if you can figure out how to thrive, you've got great opportunities in front of you. I mean, the reality is that it's not the end of the world when we're talking about the Great Reset. It's not.
No, of course not. But
I mean, we're going to muddle through. That's what humanity does. And I honestly don't think we're going to get into a shooting war. I mean, little places here, little places there. But, I mean, nobody's going to start, thinking about invading Texas, or England.
Well, Oklahoma, I mean, those guys,
Oklahoma is you got to get through Oklahoma to get to Texas.
Right,
okay?
exactly.
I mean, and Arkansas, they have good old boys up there too. I mean, I'm not worried about that. I'm worried about the societal upheaval, the frustrations, the angst, but at the end of the day, we truly are all in this together. There are going to be fabulous opportunities for people that can figure out how to solve the problems.
Well, I'm just going to keep on this thing, just to finish off this. I've been wanting to ask you, Mauldin Solutions, because this is something you and I have spoken about for years now.
For years?
No, absolutely.
Oh, God.
But what you talked about, adapting and active management. Just talk a little bit about that, because I think if you haven't launched like now, I mean, you may have pressed a secret button in the chair that.
Well, actually, we pressed the button right before we sat down and we launched. So we're out live right now.
So talk a little bit about what it is, because it is.
Okay,
this is you practicing what you preach.
Great Reset is going to create difficult choices. I've met numerous times now, Harry Markowitz, the Modern Portfolio Theory. And we have to remember that Modern Portfolio Theory, that graduate paper by a 22-year-old graduate student, was written 65 years ago. He was basically a linear programmer, and he just applied, and you end up with the efficient frontier. And I would argue, and I've done it publicly, and then he refuted it publicly, that Modern Portfolio Theory no longer applies. And we sat down with him because my view is that you have to diversify trading strategies. You no longer diversify asset classes. Your trading strategy says to you, what asset class do we want to be in this week? Mm-hmm. What is the market telling us where we should be? And so you get great traders who put you in the position to have the potential to win. I sat down with Harry this last spring. We were in some fabulous resort somewhere in Southern California, looking out over the ocean and, all of that good stuff. And he says, okay, we've been having this discussion now for years. What are you really going to do? And I began to explain how I was going to diversify trading strategies. And he says, well, you're just doing what Modern Portfolio Theory says you should do. And I'm sitting there going, no. Because you said you should have all of these strategies. He says, no. The point is that you have diversification, number one, and that it's over your broader piece. And he says, you're still doing Modern Portfolio Theory. You're just using the diversification of trading strategies as your vehicle instead of, I want so much small cap and so much large cap and so much international. He says, it's the same thing. And the light, after the 10 years of conversations that Harry and I have been having, it finally clicked. I'm going, you're right. It's just modern portfolio theory 2.0. And because people have interpreted it to mean, well, you have to get these static asset classes, and so you choose your, asset, diversification structure, which is very important. But I don't think we have that luxury anymore, because that diversification, when you do it that way, you're not diversifying your returns, you're diversifying your loss stream.
Yeah.
And so now we have to change the strategy. So what I'm doing with Mauldin Solutions is I found 4 ETF trading strategists who are professional, depth, team. I mean, there's a lot of power in the room, but they're all radically different in the way they approach the market. They have global portfolios. We can have 60 or 70 ETFs in that total portfolio. And I really did have to beg and plead and browbeat on fees. I have to raise 10 times the money that I would have needed to raise 10 years ago to make the same return, because I've had to take my fees down
Sure.
too. But that is the way the world is going. I mean, and I'm making my own rocket launch. And I hope it's going to be more successful than Elon Musk's first rocket launch. I think he had to do, 3 or 4 times before he finally got one to go up and stay up. And then getting it to come back down was even trickier. It's exciting and it's important. And I mean, it used to be you could diversify trading strategies by going to hedge funds. Okay, you can do that. And I do. I mean, a lot of my portfolio, I've got hedge funds. But that's not available to everyone.
Mm-hmm.
ETF trading, the technology has changed so much that we can actually make it global now. We can really offer things that just weren't even possible 3 years or 5 years ago. I think it's pretty cutting edge.
Well, look, the rocket's launched today, so we'll sit and watch and make sure it lands.
Well, I mean, we've been trading live for a while.
No, sure, no,
yeah, but it's the public face is now launched.
Well, I congratulate you on that.
Okay,
Finally,
thank
after
you.
all these years of you and I talking
Yeah.
about it. And look, you and I are recording this the day before the conference starts. I'm looking forward to, as always, it's a fantastic conference. It's a great lineup of speakers.
It is really the most intellectually powerful team of speakers and conference that I've ever done. This is the 14th year. I am so excited about just the thought stream, what we're going to be seeing.
Well,
so, and you're part of it, because I've got you on. You are singing for your supper.
I am singing for myself, and I'm very happy to do that.
I've got you on stage a lot, doing what you're doing right now. You just moderate and ask questions and have this silly British smile. And
there you go. I'm a curious
Everybody loves
man.
Grant.
John, thank you so much for giving it. I know it's a busy week for you, and I appreciate you giving me the time.
You.
Thanks a lot.